All right,
Thank
folks,
you,
I'm going to
Charles.
bring it out from the Fitz-Gerald Group, their principal there, Keith Fitz-Gerald. Keith, okay, I saw your 5 with Fritz note, and by the way, everyone should read it every morning. And it began with this interesting headline. So you talk about Microsoft. Let's review what really happened. And you seem a little upset about the press being gloomy and all of these other things. And Dean said, call me crazy. Call you crazy, why?
Call me crazy because these guys were not listening to the same conference call I was. What you saw was manipulation, pure and simple, the big money squeezing out all the short burn and the long, the taking profits. Ignore all that. The biggest challenge, if you want to beat Wall Street, is to recognize that Wall Street wants to separate you from your money. Focus on what matters. Azure's business is growing 31%. They put billions of dollars on the table. They're managing 60% of the Fortune 500 uses their cloud-based products. They're processing 65 trillion signals a day when it comes to security. That company is not going away anytime soon. So take a deep breath, calm down. It's an ideal example of why you want to go with Wall Street does, not what they say.
Another great headline I caught from your note, talking about pain at the pump. What I thought was intriguing, we heard from Halliburton, and this is something you won't hear in the media. That industry increased investment by 50% over the last year, but production only climbed 5%. It seems like maybe if that's the way it's going to be, we're going to have, that's a market maybe we want to have more exposure to.
I would submit that is exactly the case, because one of the things that people forget and to rush to go with the short term is that these kinds of companies are incredibly good at long cycle predictions because that's the nature of their business. So if they're investing that kind of money in a business that they expect to be there, you can almost guarantee that the demand's going to come online, because if you look back at history, they're very rarely wrong when it comes to this kind of stuff.
All right. Everyone's talking dividends in the last 6 months. Listen, you know, it gives you comfort. You get paid to wait, that kind of thing. I know you also like dividends. What's your favorite right now with respect to dividends?
You know, I'm pretty straightforward. I take a look at that oil picture, that energy picture. I like Chevron a lot because the company's growing. You get growth and income. I don't think it's adequately priced into the marketplace, which smells like an opportunity to me, Charles.
Keith, do you think we hit the bottom in this market? We just had Ed Yardeni. He goes back to that October low. He thinks that's the bottom. He's very bullish right now.
Well, I don't know that but I'm definitely in that camp. Ed and I, our research methods are different, but I also agree. You know, we've been talking about this since October. I think that was the low, which means you need to play offense. So do you want to sit in an exit row? Absolutely, no question about it. Be cautious. The Fed is still on deck, but the great companies are going to survive. They're going to continue to put up numbers, and that's why you want to be an investor right now. All
right, folks, call him crazy, but also call him good. Keith, my man, good seeing you. Talk to you again real soon.
Thanks, Charles. You too.
All right, folks. So, of course, we always want to hear from you. Love your comments, and you're always so active. So whether it's about the show, the guests, anything I've got to say, some of your feelings.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below. And of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.